Hello, folks. Welcome to Pro Trader Strategies. My name's Eric Wilkinson, and this is Spotting the Trade. I'm going to get you folks what you need to know before you roll, and that's going to be talking about this economic data that we just got, how that impacts the overall markets with a little market analysis, and maybe sprinkle in a little geopolitical fodder to round that all off. All right, so today's the day I've been talking about. We're getting a lot of economic data. I'm going to go over a little bit of it with you guys right now. It was core retail sales. That's basically stripping out the automobiles. We've been talking about how automobiles are going to fluctuate in sales as they come in and online. And it's also a very seasonal type of sales. So we strip that out. We come in at 1%, expected to be 0.7. So nice beat on that one. Retail sales, leaving in those automobiles, came in at 1%, expected to be 0.9. So beating the street on those, both retail sales. Consumers not really slowing down as much as I would have expected. I was thinking, with all of these levers and pulleys, with the gas prices being high, inflation, people would not be able to spend outside of just gas as much as before. But it seems like they are still pushing the envelope here with retail sales coming in much hotter or much better than expected. The one that was really hot was Empire Manufacturing. This is the one so we've been seeing come in and starting to become negative. As a matter of fact, this one came in negative last week at negative 1.2%. This week we were looking, this month we were looking at negative 2.1%. Came in at a positive 11.1%. So really knocking it out of the park. This has got the equities turning around, even crude oil starting to make some moves to the upside. I don't think that crude oil making a move to the upside is a good thing, but this is going to be showing some demand here for crude oil with the manufacturing numbers coming in better. Keep in mind, we've got Bullard speaking here in about probably 20 minutes. And then right after that, we're going to get capacity utilization in industrial production. A little bit later than that, we get University of Michigan consumer sentiment, business inventories, and inflation expectations. So a really busy day for economic data. It looks like right now risk is to the upside in equities. So let's get on with checking out the markets and see what's going on there. I've got crude oil moving a little bit higher, like we talked about with these higher manufacturing numbers, consumer sentiment, retail sales, all of those things is showing that the consumer is still pretty strong. Now, folks, you guys know, and I've not thought that we've gotten into a recession yet. Some folks are talking about that. It's not quite there. As a matter of fact, these numbers here are showing that we are not in a recession. Going forward, we're going to be looking for demand out of these other industrial production. We start seeing that ramp up. That's going to show demand for this. It's going to give life back to crude oil, probably looking to test 100 again very shortly. And we got bonds moving higher again as well. That yield curve is really starting to spread here. We were looking at today's economic data points to see if maybe it was going to be from a 75 to 100 basis point move. I was talking about that just yesterday. It looks like it's probably closer to a 75 right now. The economy's slowing a little bit. Prices, we're showing some of those importer prices that we saw there on that data point. What was importer prices was a little bit slightly higher than what was expected there. But one of the things is exporter prices was high as well. So import prices was a little bit lower than expected, coming in at 0.2, expected to be 0.7. So not showing inflationary pressures coming into the economy, but our exports were up like 11%. So exporting some of our inflation is a good thing while we're not importing. So that is also another positive for the economy there. So bonds, yield curve, long end is moving, price is moving higher, interest rates moving lower. Closer term, the near term, Fed fund futures are trying to decide whether or not it's going to be a 75 or 100 basis point move at the next meeting. So it looks like the market is pricing in a bit of a slowdown and that the Fed is going to overdo it going forward there. Bitcoin, nothing really to see here. It's got some strength here while we're seeing gold futures really fall out of bed. I was expecting really to see Bitcoin track with gold futures and kind of have another leg lower, but it's holding up pretty strong. Folks are coming in there and supporting that market while gold is just dismal, for lack of a better phrase for that one. VIX coming off. Yesterday, we had some good economic data late on day, right? When we were talking early on in the morning, it wasn't looking too good, but we got Waller speaking, and some good economic data coming out of China with retail sales coming in at 3.1%. So all of those things have given life back into the equities here. So risk, I'm saying, is to the upside. Plus yesterday we got some nice dojis, not really in the NASDAQ, but here we can see it in the Dow Jones Industrial Average. Those are the type of dojis I look for. Confirmation here. Now, what are we going to be seeing here? I think some strength coming into the open with institutional investors buying, thinking this is at least a near-term bottom. I don't think that they're going to be coming in with both fists. They're going to be layering in on these buys, but I think you'll see some strength here in the early hours before we start getting that rush to the Hamptons late in the day. I think retail investors will be taking over, and we'll see some strength here. So risk is to the upside in equities, barring anything really bad coming out of the industrial production, University of Michigan consumer sentiment numbers, or business inventories. I have a feeling that those numbers are going to actually be pretty good because we saw Empire Manufacturing come in better than expected. I'm going to have to assume that that leads to the manufacturing in general doing better. So keep your eyes out for those late day economic data points, actually the ones that are coming out at about 10 o'clock Eastern. So those are going to be what's going to decide the afternoon session, if you will. So right now, though, it looks like it's risk to the upside. You can see the strength off of the data points, just no relenting to the upside. I think you're going to see some follow through here today as the markets open. So risk is to the upside in equities, downside for sure in gold still. Crude oil, risk still to the upside, and bonds. Long-term interest rate risk price-wise is to the upside. Interest rates going down in the long term. Near term, we're seeing interest rates rise. If we see a better than expected business inventories, we might see that Fed fund futures take off a little bit of that pricing of the 100 basis points and start pricing in more of a solid 75 there. All right. If we start seeing some hot inflationary numbers, which we're seeing more export of inflation, which is going to be good for the Fed's mandate, that's going to give us even more room to the upside here in equity. So it looks like a strong day here in equities. This is the opportunity, I think, today would be looking at selling some puts in names that we would want to know or want to own. Those puts are going to be at a location that's below where our recent lows are, and we will be able to start finding some good strike locations to add opportunities if we get another pullback. All right. So that's what I'm looking to play going forward, selling some puts and names I want to own higher that have that high volatility we talk about in the webinars. I just did a webinar yesterday on the short call butterfly and all the rules in and around what we need to have to trade that strategy. Okay. That's all I got for you guys. Hope you have a great weekend. And if you can't take that, take it easy.